Hello, and welcome to this economics content training video produced by the Georgia Department of Education. In this video, we will review Economics Standard SSEF2, Elements A and B, that deal with marginal cost, marginal benefits, and rational decision making. A couple of years ago, I was conducting a workshop for some high school teachers, and the topic of marginal cost came up in a side conversation at lunch. I asked how the teachers were teaching it to students. Of the three teachers involved in that discussion, one said she just mentioned it and didn't really discuss it. Another said he just had the students read about it and hoped they understood. And the third said he didn't really understand it himself, so he more or less skipped it entirely. Marginal cost and marginal benefits are one of those topics that, kind of like elasticity, can seem a little uncomfortable for teachers without a decent econ background. I hope after this video, however, the concept will seem a little more approachable. For starters, the element that deals with this topic only asks the students to define it, so it's pretty low level. You never have to actually calculate any cost or benefits or anything like that. In addition, the real focus here should be element B, the rational decision making. With that in mind, let's address these concepts individually and then look at how they are used together. The word marginal in economics is used as a synonym for additional or extra. Marginal benefit, therefore, is the benefit, satisfaction, or joy a consumer gets from consuming an additional or extra unit of a good or service. As with many things in economics, it is perhaps easiest to understand this concept with an example. Assume a person is hungry and really wants pizza, so he or she calls it in, and within an hour, an entire pizza is delivered to the house, cut into 8 slices. The consumer quickly eats the first slice. That first slice of pizza brought some amount of satisfaction to this individual. We don't have a precise way to measure it, but it made him or her happy. Economists use the term utility to describe this happiness or satisfaction. There's no specific measurement of utility, so economists use a fictional measure called utils. Now, before I go any further, understand that you do not have to go into a deep discussion about utility or utils with students, just enough so they understand that it's a measure of how happy something makes you. There's no set scale for utils. A slice of pizza might bring some person 1 util and another person 100 utils. For this example, let's assume that the maximum utility from pizza is 10. Therefore, that first slice of pizza brought our consumer 10 utils. You could also say the marginal benefit was 10 utils. Now the person has a choice to make. Should they consume a second slice of pizza? Well, before we can answer that question rationally, remember the standard, we need to take a look at marginal cost. By now, you understand that marginal means additional. Therefore, the marginal cost of a good or service is the cost to obtain or produce one additional unit of an item. If you do a Google search for videos describing this concept, you'll quickly find a bunch of graphs and math equations that cover all sorts of different costs and topics. This is what makes this concept seem daunting sometimes. For students in a general level economics class, all we are trying to do is explain marginal cost just enough so that we can use it to make a rational decision. No excessive math needed. In our example above, remember that you paid for the whole pizza to be delivered. All 8 slices arrived at one time. Let's say you spent $8 for the pizza and delivery, and for simplicity, let's ignore opportunity costs and other kinds of transaction costs. Let's just focus on the $8. I know, $8 for a pizza and delivery. Maybe you had a coupon or something. How much did the first slice of pizza cost you? If you said $8, you're correct. Our person in the example had to pay $8 to get the pizza to their door. Therefore, even the first bite of pizza cost $8. Now, here is where the marginal cost comes in. What will be the marginal cost of the second slice of pizza? $0. It's already at your house, on your counter. You don't have to pay any additional for it. the second slice of pizza and the third and the fourth don't cost any additional dollars. Well, now we can start making some decisions. In the Georgia Standards of Excellence, rational decision making is described as decisions that occur when the marginal benefit of an action equals or exceeds the marginal cost. How does this relate to our pizza example? Well, let's put the marginal benefits and marginal costs side by side and compare. The marginal cost of the first slice of pizza is $8. The marginal benefit of that first slice of pizza is 10 utils. Now, for the moment, assume that for this person in the example, 1 util is equal to $1. Now, this may not always be the case in real life, but for our purposes, this will simplify things. Well, if 1 util is equal to $1, this person should definitely eat the first slice of pizza. Why? Because the marginal benefit is greater than the marginal cost. Back to our question we asked a few minutes ago. Should this person consume the second slice of pizza? Well, when you ask that to students, they will likely say things like, if they are still hungry, or it depends how it tastes. Wrong. These are technically irrational decisions because they don't take into account the marginal cost and benefits. Redirect your students by focusing on the content. What is the marginal cost of the second slice of pizza? $0. What is the marginal benefit? Well, this can vary from person to person, but here is one thing we know for sure. It will be less than 10 utils. How do I know? Because marginal benefit declines over time and with increased consumption. Ever eaten an entire bag of chips, or a box of cookies, or overindulged at Thanksgiving? How did you feel afterwards? Better than when you started, or worse? Was that last chip or cookie as beneficial for you as the first one? No, of course not. The same thinking applies here. The second slice of pizza is not as useful as the first because the consumer is a little less hungry now that they have consumed one slice. This is called diminishing marginal utility. Still, the person may get some real benefit from the second slice. Let's say 6 utils. In this case, the person should rationally consume the second slice of pizza. Should this person eat a third slice? Again, it depends. Let's look at the numbers. What is the marginal cost of the third slice? Well, $0. It's still sitting right there on the counter. Let's assume the marginal benefit of the third slice is 1 util. According to our setup, it's perfectly rational to consume the third slice, even though this person is almost full. The marginal benefit is still greater than the marginal cost. Should he or she go for 4? The marginal cost is still 0. But look what happens to the marginal benefit on the fourth slice. Ooh, -1. Eating the fourth slice will actually cause this person some discomfort or guilt or some other negative consequence. In rational terms, this consumer should not eat the fourth slice of pizza. Now, you cannot infer from this example that this person should always consume 3 slices of pizza. Our benefits can change situation to situation, as can our marginal cost. Let's take that same scenario of the person being hungry and really wanting pizza, and instead of having the pizza delivered, let's assume that our customer is at the mall and must purchase pizza by the slice. Well, this changes things. How so? Well, the pizza at the mall costs $2.49 per slice. And let's assume that's the only way you can buy it, 1 slice at a time. Now, the marginal cost of each slice is $2.49. If I change our table to reflect this new information, you notice something strange. At the mall, this person should rationally only consume 2 slices. Why? Because here, the marginal cost of each slice is different. And at 2 slices, the marginal benefit is still greater than the marginal cost, but at that third slice, the marginal benefit is less than the marginal cost. We tend to behave like this in general. We eat more at buffets or when food is provided for us for free. We consume more supplies and materials when we don't have to pay for them, etc. Students will often want to focus on the totals and point out that if the person buys 3 slices at the mall, it's still cheaper than ordering the pizza at home. This is precisely the thinking you want to try to correct. Rational decisions occur on the margin, not by looking at totals. This is true for businesses as well as individuals. The manager at a retail store, for example, may send a worker home on a slow night. Why? The marginal cost of that worker is greater than the marginal benefit. Paying that worker to work the last 2 or 3 hours of a shift doesn't make any sense if there won't be any revenue coming in for the business during that time. I have focused a good bit on food in this video to make the concept relatable and easily understandable. However, the concept of marginal cost and benefits can be used to explain a wide variety of behaviors, including how much of a good or service companies should produce, where governments should set tax rates, and even how much a student should spend on their college education. To summarize, all your students are responsible for is defining marginal benefit and marginal cost. The most important thing from this standard is that students understand how to use those concepts to explain rational decisions. This concept is put to practical use in the video for standard SSE PF1A that asks students to use rational decision making to evaluate post-high school options.